Peace, peace. Welcome to Vibes with Moody. We are not trading NASDAQ. Today, we're going to be having class. We're going to be having class. This class, I'm just calling it back to the basics. Back to the basics. Why am I calling it back to the basics and why am I taking it back to the basics? One, I think that is a proper name for the class. Two, I think that a lot of people are looking for strategies or looking for things that I don't want to say that you may not need at the moment, yet what you need is education and knowing exactly what you're doing, right? So I'm not gonna bore you too much. However, let me share my screen here. Doo, doo, doo. All right. So with that being said, when I say I'm not gonna bore you too much, I'm gonna flow through this pretty cohesive, right? And I may just do it on NASDAQ just because we're gonna have some movement and things of that nature, and I can talk about the live price action. So I'm just gonna go ahead and delete all my lines, even though it kind of hurts me too. However, I'm just gonna come over here and I'm gonna do this really fast. Well, I want to say fast. Just so that you're able to follow me. I don't want to not state this and then people not have a good understanding. First and foremost, one thing I want to say about trading is that trading is extremely easy. It truly is. What's not easy is our thoughts and everything else that we put into it, wanting to be profitable quickly and things of that nature. Some people become profitable quickly, some people it takes them some time, some people it takes them years, right? And it all is all due to the time that you're able to put into it, right? To gain that consistency, right? Because if I have you do your best to try to remember a whole paragraph verbatim, it'll take you some time. Now, the next person that has all the time in the world just saying it all day to themselves, they'll be able to go ahead and get past that first step much more quicker than the next person, right? Meaning being able to remember it verbatim. So, first things first, we only have a handful of candlesticks, and that's why I say trading is extremely easy. Why? Because once you know what these specific candlesticks do, what they mean, and what they are, it gets easier once you start to combine them with other candlesticks and start to look at the market structure and things of that nature, right? So really quickly, I'm just going to go right here and just talk about a bullish candle versus a bearish candle, right? And I can't pronounce it the best. It's like Haramashi or Harabishi. Um, it's like a Harabishi bullish candle or Harabishi bearish candle. That's like the actual name of the like specific candlestick, and it's just one candlestick. However, the opening price, I am going to go ahead and deem it to be support, right? I like to say that what I'm saying is an actual fact. However, I've read it or like seen certain things that I've listened to and have said things like that, like the opening price is the support price when speaking on like higher time frames. Yet me, I'm just going to look at it at all time frames, being like that, knowing that we have support and resistance levels on all time frames, right? So the opening price is always going to be a support. The closing price of the candlestick is always going to be resistance. The highest point to the candlestick and the lowest point to the candlestick on the specific time frame, just speaking on one candlestick, is going to deem the highest point the rejection area, and the lowest point is going to be your bounce area, right? I like to be very specific on what I'm calling things so that I can have a great understanding when I'm trading, right? So if I'm looking at a bounce level, I understand that it can bounce from this level. I understand like hurry up and buy because it hurry up and bounce from this level, right? Other um I would say versus a support, I could take my time a little bit more with that support, right? Because we want to see if it's going to hold that support and break through, or just go ahead and start bouncing off of it, right? So on the bearish side, right, still opening is going to be support, close going to be resistance, right? However, I just want to state this one little small thing, right? And regardless of the fact, the highest point to that candlestick is still going to be a rejection zone, right? Let's make believe that this candlestick came out first, then this candlestick came out second, right? And we're claiming this to be resistance, right? And we know that resistance can turn into support. This one just opened up. claiming it to be support, trying to claim this as its previous resistance as the support, right? Pushing on up, sweeping out the liquidity. And liquidity is just the highest point as well, right? The rejection zones, right? It's just depending on how you're looking at it that you're going to have a certain vocabulary for it, right? So if I'm looking, and just so that we can talk about the wicks real quick so that you have a good understanding, right? If I'm looking at this candlestick and this one already printed, right? Whatever time frame it is, once this candlestick comes out, right? Like if I'm looking at this, if I'm saying, hey, this may bounce off of support, you should understand that I'm saying, hey, this candlestick is now coming down and it may bounce off of support. However, it also depends on where this candlestick is at. Why? Because if this candlestick had pushed up and it's hitting a resistance to sweep out the liquidity, right? You see how I'm saying it? To sweep out the liquidity, you know that I'm being more of a bullish trader right here, even though that this is a red candlestick. Why? Because I'm looking to take out that liquidity, right? I'm looking to stop that trader out of their trades and get them to buy more positions on this on their opposite side, on the side that I'm trading, right? So with that being said, if I had it all the way up here, I know that if I say, hey, I'm looking to see if it's going to bounce off of the support, I'm looking to see if it's going to bounce one off of its previous candlesticks opening or closing price, right? Because it's up here. So right here is the first place that it has to pass through, right? So boom, and its own opening price. It passes through there. What you have to be able to conceptualize is make believe that everything from this line that I'm drawing right here down is not there. Make believe that that canvas behind it is white. Now you're going to start to understand candlesticks. Why am I saying that? Because this candlestick had opened up right here. It pushed up, right? And started coming down. So as it was pushing up from its opening price, it had no wick to the bottom, and it just started pushing up. It looked like a strong bullish Hirabishi candle. Once it came back down and broke right here, and it went down just a tad bit, you seen an inverted hammer. And that's what you have to be able to conceptualize, right? It's all about what are you seeing live sometimes, right? Because a lot of us are day traders and scalpers, right? If you're a swing trader, hey, you have nothing to worry about. I can actually make this class extremely easy for you, right? So with that being said, we come down here, we break our support, right? Our previous resistance, come down. It's gonna come down to its 50% retracement. Thank God it says real body right there. But yeah, literally 50% retracement. And I will show you that on any candlestick, right? Once we get to the chart. So long story short, as it comes down, if I'm saying is, and you can see that it's past that area, hey, it's gonna go down to its support price. This is where it's gonna go down to its previous candle. That's all you need to understand, right? So we want to catch it bouncing up and going back down because this candle is not just going to go. Sometimes it does. However, majority of the time it goes right. So long story short, yeah, I'd have to come down to the support and break this level first, its previous candlestick, before trying to take out the liquidity. And that's why I say that support is a great area to take profits at. Support is a great area to take profits at. Why? Because a lot of times, right, what happens is that this candle comes down here and it actually doesn't take out the liquidity and it just bounces off of the support and then it keeps going. And yeah, it comes right back down, but it doesn't break that level, right? And if we're playing options and you're playing zero DTE, or depending on the expiration that you have, that theta is now killing you. Because even when it comes back to your entry point, you make no money, right? Um, yeah. Mhm. Absolutely. So it'll be confirmation to get into the downside, looking at it as support, right? So if it was a bounce level, we know that it can bounce off of it really quickly, right? So if it was to break past that 50% retracement, right? Because we want to look at it and see if it's bouncing off of it. And I'll show you like an example here when I get to the chart. However, if it breaks under that 50% retracement, that is a good indication to go ahead and get in. Like even if you don't know how to trade and you just know how to use that 50% retracement, you know that it's time to go ahead and get in. Awesome. Great question, by the way. Take your time. Say it again. No, it's side by side. I see what you're trying to ask. Like, is it the candle? Is it like this? Yeah, side by side, right? Hold on. Let me go ahead and share my screen once more. Appreciate you. All right. It's side by side, right? So when I'm showing you this example here, it's just the fact that they want to separate the bullish candle from the bearish candle so that you have a good understanding of where that one's opening versus where the green one's opening versus the red one's opening, right? The green one opens at the bottom, red one's opening at the top. Yet you have a very strong mind. Go ahead and remove that picture out there, put both of those together. What do we have? Correct? Depending on how you look at it, you're both correct. Both sides. Why? Because hey, it could have been a tweezer bottom, right? Because you don't one thing that we don't know is the candle that's right here. So the reason you said tweezer bottom is because you're looking at, hey, what if this candle was going down and this one's going up? And then you said tweezer top. So you see how you're just reading left to right, just like we read a sentence or a verse? That's how we're supposed to read the candlesticks as well, brother. That's why I say you was looking at it pretty great. So now what I'm gonna tell you that's sharp about your mind is the fact that you're able to see other you see how I do my best to help people unlearn to relearn. I'm not trying to take out double top. I'm not trying to take out equal highs. What I am trying to do is let's level that down and let's actually identify what it is, which is called a tweezer top. That's all I'm trying to do. Because if I can get you to understand that, you see how you read from left to right. All right, let's go ahead and just read really quickly. Just really quickly. What is this? These three candlesticks. All right, now we drop all the way down. We understand. I'm going to get you to understand the chart where it's like you're supposed to always look left. Sometimes people think I'm going all the way. No, it's just right here, left. Boom. This is where it stopped at. You see that? Remember when I was speaking here and I was saying, hey, let's be careful. Why? Because this is a great place to sell right here at the support when it's going down. It was a great place to sell at. Why? Because it can bounce off of that support and not break the support and return. So now when we're looking at the candlesticks over here, right? That's exactly what we're seeing right here, right? Boom. I know that this candlestick fell, right? But boom, that's all I'm trying to get you to understand. That's why I didn't break nor sweep this liquidity, right? The next 25-minute candlestick took it all the way down and took them out. But before it had to take that out, it had to break right here, right? Then it had to break right here. Oh, snap. Oh, snap. Go ahead. Yeah. Yeah, well, because what I would do is the reason I'm gonna speak to you like this is because you was able to identify. A lot of people may have missed what you said, yet you was able to identify that this was going to support, yet you knew that it was a previous resistance to it, right? So why? Because here, I'm just talking about the level. We're going with the candlesticks, but yet it's the level, and all you have to do is look to the left, and you will see the resistance. You know what I'm saying? So I'm not sure if you caught all of that to the left, yet I knew that you caught this. So yeah, so what I would do here is, and so that we don't get lost, right? And you don't get lost, circle right here because basically you're saying you will enter in right there, right? So what I would do, and this is just because I know that you're in a coaching program and you're more advanced. So I'm gonna just go ahead and show you this. You're gonna want to go ahead and split your time frames, right? And you can utilize as many as you need, right? So let's go ahead and find that, right? So one versus that 25-minute right here. This is a 5-minute time frame, right? So this is where it happened at, right? So now if we're looking at this, you remember that support right here. You see how we won't break that support yet? And that's why I'm saying that. Even though it gave us that evening star reversal pattern, still wouldn't go break that support. Why? Because it needs to break that one first. You see that? Boom, bow. Each one is a support level. That's what most people don't know, right? You're saying resistance because you're looking at it the opposite way than what I'm looking at it. Look at it this way, meaning, all right, let's talk about it this way. Morningstar blasts off, breaks resistance, and takes liquidity and goes up, right? Now we have a what? Tweezer top. that brings this down, right? That's why I'm saying this as a support. I'm looking at this because all of these candlesticks are truly stuck in this level, right? So that's why I'm saying, hey, they're trying to push it down to the support. Yet I'm going to have an understanding that, okay, even though I'm on this candlestick, which is a 5 minutes candlestick, right? It's going to take 5 minutes. I understand I have to break this level to get here. I also have to break this level here to be able, you see how it's bouncing from there? That took 5, 10, 15, 20, 25, 30, 35 to 40 minutes, because you see this is 35 minutes right here, and you're just breaking in. So we could have got in here off of the tweezers top, or we could have broke this time frame a little bit further down, right, depending on the time frame that you utilize, and we could have got in on a certain reversal, like such as right here, they gave us the tweezer bottom, but it gave us the evening star. We could have entered in right here, put our stop right there, entered in right there, and dragged her all the way down, while knowing that these were our liquidity. Supports. Okay. So since we're talking like that, then yes, right, right. We would have got in right here. So this would have been a support, right? This would have been a support. Just the body of the candlesticks. This would have been a support, right? Of course, that one as well. I'm just bringing it down a little bit lower, but look, let's go ahead and just draw it out because you'll see how it would stop there. You know, each level would have been, oop, not that one, would have been a support, right? So when I was saying liquidity, right, I was just looking at like, hey, where I'm going to be able to sweep out some of my money, right? So say we entered in right here. I'm just going to draw it up for you so that you're able to see it, right? That's your stop. You know that I always say, put your stop right there. Yeah, just drag your stop up a little bit so you don't get stopped out, right? And then go ahead and draw out your liquidity where you would have got in right here. First liquidity would have been right there. You see the green can. Well, you would have not had took it off of that green candle. So I would have told you remove that because that green candle took that liquidity. So the next one would have been right there. That candle took it out, right? Next liquidity would have been right there. That candle took it out, right? Each of these bottom of these wicks would have been your liquidity. And you can see whatever liquidity that she just didn't want to take. And 9 times out of 10 is going to be on a market structure, right? Like right here, that we could tell that that was a market structure, right? It's going to want to have to bounce from that level, right? We'll put a blue line there and you can see how she tried to return to that. Boom, right? Because that level right there is the same thing as if we were looking at this level up here, right? It just finally broke that floor. Let's just look at it as a floor, right? The support, let's look at it as a floor. Does that answer your question though? All right. You're more than welcome. Absolutely. So let me just take you guys back right here. Support, resistance, resistance, right? Or support, resistance, right? Because it opened up right here. So that's one main thing that you're just going to want to have to understand. Now, there's only a handful of candlesticks that you really have to identify and really understand what they are, right? So one of the first ones, and everybody I know feels like they know this candlestick, right? It's going to be four of these. Four dojis, right? There's going to be a doji, a long-legged doji, a dragonfly doji, and a gravestone doji, right? So the common doji, some people call it common doji, right? What I want you to understand is just look at all of them and just know that they're dojis. Yes, in the beginning you're going to want to know, like, hey, this is a long-legged doji. So the long-legged dojis, look at it as a Christian cross. That is so fairly easy to remember. Hey, it's a Christian cross. All right, cool. The common doji, sort of like the Christian cross, it's just right in the middle, right? Similar, right? However, we know that this one's more bullish. The only reason we know that is because of where the price opened up at, right there, right? We opened up here, we went down low, yet, and before we went down low, or we went down low, came back to our open price, went up, and then closed it right there, right? So that shows us that bulls took control of this candlestick, even though it was going down. That's how you know that this candlestick is more bullish. This one that's why they say common doji or standard doji, right? Because nobody's actually winning that one. It's a tug of war, right? And just know that it will never stay at a tug of war. Price never agrees with each other, right? However, the dragonfly is going to be more so of a bullish one, right? The gravestone is going to be more so of a bearish one, right? So now this is what's important about them. It's where you find them and how you find them, right? So let's just look at this quick example right here, right? We found a regular doji, right? And that's at the top of an uptrend. First and foremost, what does a doji mean? And look, great, right here. A session in which the candlestick for a security has an open and close that are virtually equal and are often components in the pattern. I think that's what that says, right? So, long story short, long story short, basically what it's trying to tell you is the doji is a tug of war and they're agreeing on a price. It went to the highest point at that specific time frame, went to the lowest point to that specific time frame, yet they closed it at an at the same price that it opened and closed at. Or right at the price, it could be like 10 cents or 3 cents off, right? So that's all that the doji is telling you is a tug of war and who is it going to win this war, right? Now, whether you find the regular doji or the cross doji at the top of an uptrend, let me go ahead and pull out my chart so that I can explain this. I'll just delete all this. Let's take this up to a higher time frame just so that we can find these things a little bit quicker, right? All right, so I found a doji right here. Boom, right? There's also one right there. This one right here and this one are the same dojis. However, and they both mean the same things. What do they mean? Indecision. What does indecision mean? They don't know if the stock wants to continue on its uptrend or it wants to reverse back down to its downtrend. And that's why people find dojis. However, there's two things that you can identify with these dojis. If you find a doji sitting at the top of an uptrend, there's more of a likelihood that it's going to reverse to the downside. Yeah, you have to know the definition. The definition is, hey, it's indecision. It can continue on to the upside or it can continue. It can continue on to the upside or it can reverse and go back down to the downside. That's the only thing you have to remember about that. And that's when people start to get a little foamy and you're like, oh man, what's going to happen? Right? However, if you found it at the bottom of a downtrend, right? I know that this is still like, a ranging trend, yet this is a 2-hour chart on a smaller time frame. This is a downtrend, right? Because this took how many hours? 2, 4, 6, 8 hours. That's a whole trading day, right? So that whole day was a downtrend. If you found a doji at the bottom of a downtrend, it has a more likelihood to want to reverse to the upside. Yet you have to understand the definition. It's just indecision. Yet the likelihood of a doji, if you finding a doji at the bottom of a downtrend, is going to reverse to the upside versus you finding, not versus, however, finding it at the top of an uptrend, it still also has a likelihood to reverse to the downside. Now, let's see if I can go and see. This is the downside, right? And this is it reversing to the upside. See, and this is an inverted doji, like the inverted cross, right? Signifying that the bears have more of a momentum, right? Just like that inverted hammer. They have more momentum. Yet what I'm going to tell you is, yes, they got a little bit more momentum. Yet what's really going on is this. Remember this? This is the opening price. It couldn't get past the opening price, right? Boom, goes back down, breaks the support, goes back down, closes. So we know now this was a resistance, yet it's going to be a resistance to its previous candlestick because it's a close, and this one opens up right here. So we know we have a good support and resistance right here, right? So we know that it's this level that it needs to get over. How do we know that? Let's just go ahead and put a line right there and look across. The bodies of the candlesticks are being hard to close over that line or get past it. It was right here. Boom, brings her down. Then they go ahead and power her back up. That's just telling you that they wanted to sweep liquidity. Why? Because his main support was here. The bodies of the candlesticks. And this is why I'm only talking about bodies of the candlesticks, and I'm going to talk to you about specific candlesticks. Why? So that you can marry that to your mind. All right, cool. So now, with that being said, we also have what we call a spinning top, right? That's another version of a candlestick. Spinning top, right? For people that may not know what they look like, let's just go ahead and identify it. And this is something that when I was learning, I would literally look it up with the person. Oops, I only put spinning. And that's just me. That's just how I learn. Even though I'm a visual learner and hands-on learner, it's just, it just makes me feel like I found it. I don't care that I'm learning from someone. It's like, oh, okay, cool. Oh, look at this one. Okay, cool. Um, right? So these are all different versions of spinning tops. There's a bullish spinning top, there's a bearish spinning top, right? It's similar to a doji. It is not the same, yet it's similar. What I like to look at this as is, remember when we were kids and we used to spin that little spinning top? Like on the thing, it had like two little points in the end, you try to get it balanced, then it falls. That's what I look at the spinning top as, right? So with having a spinning top, what is a spinning top? A spinning top is similar to a doji, yet it's not a doji. Let me go ahead and read something for y'all because I actually like doing that. Go ahead. hmm Um, I wouldn't say that. I wouldn't say that. Not necessarily. Yeah, it is. I just don't want to say that because they specifically say like the doji is indecision. Like they don't really. That's why I was looking for like. Let me just find the definition. Slick. Yeah, I like that. I like that. That's why I said slick, right? Let me just put define. Oh snap. Oh dang. It's a technical alliance pattern with a small center and long upper lower shadows or wicks, indicating market indecision and potential price reversal, right? And that's why I said similar. I'm not gonna because to say that, that's basically saying that it's a doji, right? That's why I say similar. And like when I first started learning all this, that's why I was like, nah, spinning top, I'm gonna look at it just like a doji. However, just knowing that they're similar, they're not the same. This is not, I done traded it over and over and over. It's not saying that it's going to reverse, right? Why? Because if we look at this right here, what am I going to truly look at this pattern as? Because I've been able to break it all the way down, right? I'll break it down to a different time frame since I've seen it here and know that it was a morning star there, or know that there was a tweezer bottom. Because it needs a confirmation. This candle in itself is not like a tradable candlestick, if that makes sense. You can't just, oh, I see a spinning top. I'm about to take this to the upside. Like right here. You see how this person says example of a spinning top, right? He's showing you with the spinning top and things of that nature. Yet me, the way I look and read, right? We read from left to right. I'm gonna be like, oh, so if I see one of these and we start to push up, I can just take it to go. No, that's not true. Right. So I'm gonna say it's similar to a doji. I'm not gonna say it's just indecision. That's why I identified it with like the little spinning thing where we can say indecision. However, I'm not gonna say that. What I'm gonna say is more so like you can tell which side it wants to go due to how big that body is. Right. If the body's looking more so like this, I'm not gonna trade it. And it depends on how, like, if the body was like this and the wick was like this, oh yeah, I'm taking that to the upside. You see how confident I was to that? It's just this wick is long. The wick, the top of the wick to the bottom of the wick is called the range of the candlestick. The body is the support and resistance. That's where it's gonna play at. That's the market structure. That makes sense? It it's like this. Watch this make sense. Most people don't know this yet. Go to the daily. It's easy to identify market structure, right? All right. You see, it's doing it right now. See, it's not taking out the top or the bottom. It's the new candlestick. Market structure right here. Matter of fact, I'm gonna do it from the previous day because this is a new day. I'm gonna do it from right here, and we're gonna identify with this. Look, and I'll circle it so that you know I ain't playing with you. We're gonna go with this candlestick right there. Now you drop it down to a smaller time frame. I don't care what time frame you like because that's a huge time frame. You're gonna take it to the 5 minute, and that's what we played, right? Man, I don't like how I do that, right? This is what we played right here. So This is the range. Oh, and let's take it to the daily so you can really identify with it. Now you know I ain't lying to you, so I'm gonna just delete that yellow stuff. And delete this last one. And I'm gonna identify with the range and making it the high green, the low red. Did I go? No, I went to the wrong range. Green, red. This is literally the market structure. You're gonna see a swing high and swing low. So right here. Oh, whoa. All right. So it's just how the market opened up. And I know I was talking about it like, hey, we're potentially gonna gap up or gap down. Yeah, right here. All right, cool. We're in structure. You see how like these candlesticks, even this low, that's where it created it, where it doesn't want to go back that low. It swings high to take out those highs, these liquidities. Boom. This is the structure though. This is the body of the candlestick where they're gonna want to stay at because they just created the liquidity right there and liquidity right here. So now this one drops just to sweep out the liquidity. And that's because the market was closed and how it just opened, or that would have not just happened like that. Right? And they sweep out liquidity. Now they've done that, the liquidity is literally now sitting here. The main liquidity, not the first, not like just all liquidity. The main liquidity is sitting right here. The main liquidity is sitting right there. Right? So now that they're taking this out, they'll go take this out if they wanted to. Maybe by like Wednesday. Now you're gonna learn how to trade. That's how you have to. This is your support, this is your resistance of that previous day. Remember, this is today's candlestick. These levels of the previous day. It's just the body of the candlesticks. All right. Once we can break out of that, that's the body. We're out of it. All of this is wick. You just seeing body right now because I done brought you to a smaller time frame. To the higher time frame, that's straight wick. You know what I'm saying? So it's just shoot, 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 trying to suck up all the way to break out of here. Because if it could break out of there, and that's why you see it creating support. Now, if it does that, before I try to just tell you, because that's what's gonna happen, and go try to take one of those out. It just you don't have to go with this daily. I'm just utilizing it for an example. Where now, right? This is it right here. It takes this out, boom, closes right here. Now this is what was bouncing that I showed you, like boop, boop, boop on top of the liquidity. That's what's bouncing. Now you get it, right? And this is called a spinning top. That one candlestick there. That's the spinning top. What we're talking about right now, that's the spinning top, right? So with this, regardless of the fact, if they're able to hold this opening price here, I'm gonna just show you how to read it. They're right here, right? Next level that they gotta go. They went over that one. You see it, support and resistance. They're gonna stop it at support and resistance. Now they're gonna have to hold that level. They can hold that level. Gotta be this level. They can hold this level to that level. It's this level. You see how you would have thought it's that one, but you missed that one. Think of like being in New York in the Bronx and having to like hit building to building. You may want to jump to that building and it seemed closer, but you might want to hit the block hitting these buildings first. It makes sense, right? And that's how you gotta look at the support and resistance. It's just most people don't know that, right? Awesome, right? So you're more than welcome. So now, right? With that being said, a spinning top, we could look at it like as being indecision. Yet I want to give it its own power, where it's like, look at these. How can I explain it? Man, look at it as a little spinning top. Don't try to give it too much. Look at it as a doji. Just know that the doji is what you're truly looking for, right? You're not looking for that indecision, right? If you see this, you see the spinning top right here. This is why I have a hard time to try to explain it, is because you see how they're using it as entry, stop. What is this? What is this right here? These three candles right there, y'all. There you go. And I don't want to mess up and be like, just use it as an entry point. Now you can understand if I say that, why I would say that. That's why. That's why I say it's similar. It's similar, right? When I say that, she could show up, go to 5 minute. She could show up with the morning star. See that one? But that's the long-legged doji. That's still the long-legged doji. But you see how it resembles the spinning top? That's why I say what I say. So just look at it as a doji. Just know that she a spinning top. Just let her spin. Let her spin. You use her as an entry. But if I don't show you that, because now you see her, right? She's right there. It's just somebody's gonna fight me and say that that's not textbook pattern because that wick is a little bit longer. So you're gonna force me to go find a candlestick that has a longer wick like that. You know what I'm saying? Like this one right here. But then that one's a doji. They're gonna fight me and say, but that one's a doji. That's not the spinning top. It's similar. They're similar. All right, cool. That's why I'm saying there's not a lot of candlesticks. See, you know what the dojis is? All of these are just bearish haramushis. If you put them together, three black crows, things of that nature. However, all right, let's go back over here. This I wanted to get past this one because this one is like kind of like a pickle to get through. And then you have this. A hammer. You got a bullish candle, a bearish candle, spinning top, dojis, then you have hammers. There's literally only 5 candlesticks. So, do you see why I'm saying trading is easy? How many people knew that we only have 5 candlesticks? Over here in the Zoom, drop a 1 in the chat if you knew, drop a 2 in the chat if you didn't. Over here on YouTube, drop a 1 in the chat if you knew that all we had was 5 candlesticks. Damn, I'm only getting 2s. Amazing. That's why I say, hey, let's take it back to the basics. Why? Because if you know the basics, right? Meaning, what are the basics? This is a female. This is a male. This is a woman. This is a man. Let me not say it like that. Looking at animals, this is a female. This is a male. Looking at humans, this is a man. This is a woman. Right? You can now when I start to utilize those words, you can identify things where it's like, oh, he's talking about a species. Or he's talking about an animal. Or he's talking about a human being. Right? That's what's so important about language. That's what's so important about trading. It's just knowing these things, right? So what is a hammer? A hammer. Oh, and I'm sorry, you actually have 6 because you got a hammer and you got a pin bar. But the hammer, watch, hammer. Just keep looking at it because I'm gonna explain both of them, right? Hammer, hammer, and I'm gonna tell you right now. This is a pin bar. That's a hammer. This is a pin bar. See how they say hammer? See inverse hammer. This is pin bar. All right, watch this. This is why I learned how to trade fast. Don't it look the same? Because it is. It's like somebody saying a boy and a man. It's just a little different. Meaning, I see why you're saying that. I see why you're saying that, right? Because it's not the same in similarities. The hammer and the pin bar can show you more of an aggressive move of buyers or sellers. Why? Because it's it's letting you know that the sellers, if it has a longer weight to the downside, the sellers lost momentum to the downside and the bulls pushed it back up. So now let me go ahead and let me put you on, right? So this is my vocabulary. We have healthy hammers and we have strong hammers. Healthy pin bars and strong pin bars. All right. Are y'all liking the class so far? Drop a 1 in the chat or fire, whatever you want to do. I appreciate it. I'm about to be wrapping it up here on YouTube, and I'm gonna go a little bit deeper in with the coaching program here in the community. However, I do want to at least get out the hammers and the pin bars, right? So let's look at this one. We all know that this is a morning star. right? However, and we all know that this is towards the bottom into the morning star, and that's a cup. That's why I'm saying trading is extremely easy once you get to start understanding it, right? Oh, I like this one better. So this right here, I'm always going to look at it as a strong pin bar or a strong hammer. Why is that? Because we're over the opening price. That's all you need to know so I don't confuse you. If the hammer or the pin bar is over its opening price, it is a strong pin bar. It is a strong hammer. Why am I saying that? Let's go ahead into the explanation. Because we opened up right here at the bottom of the candlestick, right? Then we pushed all the way down. This was a bloody red candle like this. You hear me, y'all? It was a bloody red candle like that. The rest of that green up there was never there, right? Bloody red candle to the downside. It looked just like this bad boy here. After that, the bull started to suck up the price, pushing price up. Boom, 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 boom on a smaller time frame. Because if we're seeing this on a 5 minute, on a smaller time frame, they're starting to reverse the price up. You're getting green candlesticks going up. And I had that understanding. Whenever I see a wick on a smaller time frame, they're pushing price up. On a smaller time frame, they're pushing price down. Right? So let me go ahead and capitalize. That's how I started understanding capitalize. You got to do it in now. Can't wait for it. You got to go now. All right, that makes sense. So now that I said that, the reason it's strong is because after they pushed them down and it was red, they pushed them up, pushed them up, pushed them up, get back to its opening price. Now, if it would have closed, I'll show you. It has to be red. However, now that we pushed up, pushed up, pushed up, pushed up, pushed up, right? It came down a little bit and closed. That's what makes it a pin bar. The fact that you have a, a little wick at the top, just something a little small. That pin, you see, that's the pin bar, because that's a bar. That's the pin bar, right? We use that as an entry point, right? The thing that we love about pin bars and hammers, where you want to find them at, if you're a bullish trader, you want to find them at the bottom of a downtrend to reverse back up. That's an indication for reversal. Hammers and pin bars are indications for reversals. They're not confirmations, though. That's why we trade reversal patterns. You get it? Because when you put them together, they become a pattern. And that's why we trade the reversal pattern. Oh my God, y'all following me. Right? So hold on real quick. Hold that question. I'm about to wrap this up. And we're just going to be over here in the coaching program. However, a pin bar and a hammer are not reversal patterns. They're indication of a single candlestick reversal. Yet you need a confirmation. You need that next candlestick. And that's why I said reversal pattern, right? You need that next candlestick to confirm that. Yet I'm such a whiz that I already see the reversal right here, the first universal reversal pattern, right? And we'll get into reversal patterns and things of that nature. I don't want to flush our brains way too much. I just want to give you the basics of it, right? So the hammer, right? I'll pull up another one. You want to find it at the bottom of a downtrend, right? If you find a hammer at the top of an uptrend, like it pushing up, because it's like the bottom of a downtrend right here. This just that you're seeing the rest of the trend go down. Yet this was the bottom at one point and it reversed back up. Now, if you want to find one of these at the top for it to reverse back down, it has to be inverted like this at the top, right? So how we're going to find one of those bad boys? We're going to find one of those bad boys right here. Bow! At the top of an uptrend, right? Reverse down, started pushing up, created an uptrend, started to reverse back down, right? So even this wick at a smaller time frame than what this is, this was a 5 minute. On a 3 minute, it gave you an inverted pin bar on a 3 minute up there. It just kept going here on this 5 minute and then gave you that entry to go down, right? Because the entry was right here. And we all know what those three candles would have been. Wow, let's go back down. Right? So you want to find a hammer or a pin bar at the bottom of a downtrend, or you want to find a inverted, right? An upside down pin bar or hammer at the top of an uptrend for it to go right back down. Point blank period. Right? Let's look at this one really quickly so that you can see more pin bars or more hammers, right? Bottom of a downtrend. Reverse pattern. Goes up. Bottom of a downtrend. reversal pattern, goes up. Yet you need that confirmation. Bottom of a downtrend, reversal back up, going up. See, this was another one here. They just missed that one because they want that body like that. You see, they want that hammer or that body. Yet I ain't gonna lie to you. That's not one. That's a spinning top. Yeah, it's just me. I'm gonna manipulate that time frame, and I'm gonna be like, wait, oh wait. This is the 5. Oh, there's one on the 3. Hold on, and I just I'll take it because all time frames are the same. Once you know, you know. It's just your thoughts and fragments of thoughts breaking down. That's all. That's for another class. However, if you guys enjoyed this, make sure to like, comment, share, and subscribe. I will see you on the next one. Peace and love.